inflows to Jamaica increased by 4.2% during the 6 months of this year, reaching approximately US $1.8 billion. The Bank of Jamaica says the increase was driven in part by a US $24 million rise in remittance inflows in June. The latest figures come as Jamaica's trade deficit continues to widen. The Statistical Institute of Jamaica reports that the gap between merchandise imports and exports reached approximately $2 billion during the first 4 months of this year. The Bank of Jamaica is reporting net losses of $7.3 billion for the period January 1 to August 12 this year. Meanwhile, the bank's total assets increased by about 8% to $1.3 trillion over last year. The increase was driven mainly by higher foreign assets, while total assets rose by 6% to $258.5 billion. Demand liabilities, which include currency in circulation, surged by about 26% to $869 billion. However, other liabilities fell by roughly 19% to $393.7 billion. The bank's capital and reserves also declined about 14%, falling to $56.7 billion. For the trading period of August 26, 2026, the most actively traded securities were Trans-Jamaica Highway Limited with 6,383,102 units, representing 27.9% of market sales. Stanley Motor Limited ordinary shares with 4,101,000 units, representing 17.93% of market sales. Sagicor Select Funds Limited financial shares with 3,413,065 units, representing 14.92% of market sales. Investor activity remained concentrated in distribution and transportation plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for August 26, 2026, Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $159.27 and buying at $157.59. The Canadian dollar had moderate gains supported by 49-cent transaction spreads. The Canadian dollar sold for $114.85 and was bought for $114.36. The British pound saw continued volatility in short-term trading, which created opportunities of $2.30 in profits for the banks. The British pound sold for $216.90 and was bought for $214.60. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, before you finance your next professional development program, think about the offer: 0% interest, pay over 12, 24, 36 months. It sounds like an easy way to invest in yourself, and sometimes it is. But professionals should look at these offers differently, not simply as an education decision, but as a credit and cash flow decision. A training opportunity may promise a new certification, business skill, network, or career opportunity. The financing makes the program accessible today while spreading the cost into the future. And there isn't another issue we don't discuss enough. What is the economic return on the training? If you're spending $8,000 to acquire a skill that can significantly increase your income, financing may be a strategic decision. But if you're accumulating certificates, courses, and coaching programs without converting them into higher income, clients, promotion, or business opportunities, you may simply be accumulating monthly payments. Professional development should therefore be evaluated like any other investment. Before you invest in your next level, understand the debt you're using to get there. And that's today's business report. I'm Denise Williams. Until next time, stay informed, stay intentional, and keep building forward. See you soon.